Hello traders and welcome to another video review. Today is Thursday, 22nd of the October 2020, and as usual we are going to take a look on the event calendar to see what is going on the from the macroeconomic scale, and then we are going to perform some kind of technical analysis of the various pairs. So let's just begin with the Forex calendar review. As you can see here, we got the Thursday here on the screen. So we are after the speeches from Australia's Deputy Governor Guy Bell. And as you can see, another thing that has been released was the GfK consumer climate from the Germany, and it was minus 3.1. As you can see, it was worse than expected, minus 2.9, and previous reading was minus 1.7. So the consumer climate is getting worse in Germany. At 9 o'clock, there's interesting data from Spain, which is unemployment rate for the third quarter, and the previous reading was 15.3% of unemployment in Spain. We will see if the actual reading will be bigger than this one. It's a kind of interesting data because we know the youth unemployment in Spain is still on elevated levels, and the overall unemployment rate might get increased as well. There is some speech from the Andy Haldane at 10:30 as well. This is related to the British pound. And then we got some data from the UK as well, but they are not that much important. The next important set of data which has a medium impact on the market are unemployment claims from the US, 2:30, and of course continuing claims for those of you who are as well following the property market. This existing home sales data scheduled to release at 4 o'clock p.m. So some data from the job market, and 4 o'clock consumer confidence. As you can see, it's getting worse and worse in Europe, mostly due to the relative bad consequences of the COVID pandemic. And it looks like the most important data for today, quarter to midnight, are data from New Zealand, which is again consumer price index. As you remember, yesterday we had a consumer price data from Canada and from, I guess it was United States, Canada, and it was, let me see, UK, of course. And the UK, of course, today we got some data from New Zealand. Consumer price index is expected to increase significantly from minus 0.5% to 0.9% on the quarter scale, and it decrease from 1.5 to 1. Increase from 1.5 to 1.7 as well on the yearly scale. So that's kind of a very positive and optimistic expectations from the consumer price index. It might get a little bit of inflationary pressure, which is what it's all about. And then, of course, at midnight we got some PMI manufacturing data from Australia this time. So this is it's Friday basically, right? It's a Friday, so maybe we'll not talk about it today. So what is the plan for now? I guess that in Thursday we might take a look at New Zealand dollar to American dollar, of course, and I think we should take a look at the S&P 500 from the so this is the American, of course, one of the American stock indices. So let's just take a look at the New Zealand dollar ahead of the data release. Maybe it might trigger some move. Why? Because right now the New Zealand dollar is in the process of making the left shoulder, of course. This is the left shoulder, as you can see, right shoulder, head, left shoulder. This is classic head and shoulder pattern, and right now we are making the left shoulder. The price broke below this black trend line here, but effectively it didn't close below it, just make a low, made a low at 65.50. So this is the low, and then we got this huge rally towards the highs, the local highs located at the level of 0.6678. But again, the highs were not violated. So as long as the market is making this left shoulder, this is our scenario, so that's fine. But please remember, we still see the decline coming on the New Zealand dollar, and the first leg of the decline will be towards the level of 0.6509. Then of course the low of the neckline, which is 0.6487, and then even lower. But this will be analyzed once we get there. So right now, nothing basically new has happened. New Zealand dollar is making the left shoulder. Everything is going according to the plan. Only if we will break above 0.6712, which will be higher than the right shoulder, then we might say that okay, we are abandon this scenario of head and shoulders price pattern, and we will see what is going on then with the New Zealand dollar. So that's the New Zealand dollar. Let's just take a look at the S&P 500. We are analyzing the SPY, which is the equivalent for the ETF market. And right now, what we have here is nice violation of this trend line. So that's nice. Remember, daily time frame chart. Let's just do it this way. This is the yesterday high. As you can see, very negative candle here, apparently from bears. So they are pushing it lower. This is temporary, let's say, level of resistance, 354.09. This is the top of this rally, so that's okay. This is our technical resistance, temporary. Again, the lows, as you can see, are kind of close to the 340, and the lower was 341.14. So that's the low for today. As you can see, yesterday and 2 days ago, we got this huge spikes from. Let me just make it bigger. Huge spikes of the candlesticks from above. This is the upper shadows, upper spikes, and it's not good for the bulls at all, because the higher prices are being rejected. So the plan for today is to break below yesterday low 341.14 and head towards this technical resistance, old technical resistance. Now it will act as a support, 339.23. Once we break below this level, we got one more technical support to cover, and this technical support is somewhere here. This is the support. Let's make it just green, and that will be fine. And this support is 331.14. So please watch how this market will develop within the next 2 days, Thursday and Friday, because it might be kind of important. There you go. Our new updated trend line. The market is still trading below it, and if we just maybe we should make a channel here, a parallel channel, because it looks like, yes, there you go, the market might be following the channel as well. As you can see, almost there. So this is the channel here. Some of you might say, okay, this is the flag pattern because we have a pole here, and then we got some kind of a, maybe not flag, but a pennant or a F pattern, as they call it. That's fine. You can call it F pattern or a pennant pattern, but it's not like 100% like in the book, a classic pattern. But if we break below 339.23, this will no longer be a reliable pattern, because if this is F pattern, then we should break to the upside, of course. as the F pattern says, but I'm just interested in one more thing, which is the Fibonacci retracement. As you can see, if we add the Fibonacci of the last wave here, the short wave here, we broke below 50 and we are about to hit the 60%, 61%, which is located at 339.94. So as I said, this zone around the level of 339.23, 339.94 is very important. It's the key short-term zone for the S&P 500. If violated, then we will likely break out of this short-term channel and will head lower towards the level of 331.14. So please keep an eye on the data coming from the markets, from the of course economic data, like the one that we have for today, for example. And please of course keep an eye on all of the comments of the FOMC members, and of course from President Trump, because we are getting closer and closer to the presidential elections in the United States. So that's everything for me for today. I guess we have covered two markets, and I hope some of this analysis will be continued in the next video. Thank you very much for watching, guys. Have a nice day and see you next time. Bye bye.